Welcome back to Instables, everyone. Happy Saturday. Hope you guys are having a blessed weekend. Again, going over our intraday swing and long perspective here as we do close below our trend line here that we have been tracking again on Friday, yesterday, closing below here. What exactly are we looking for from here? Again, after our PCE report giving us that continuation on lower, after our PPI from a week and a half ago, again, showing us that increase in inflation as well. We did get this pullback. I'm going to go over exactly what we're looking for going into next week. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room. Go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the SPY with you guys here again as we're closing last week, leading into next week again, gapping down here, retesting our 200-day moving average here, looking to see if we will either hold or possibly continue on lower. If we do close below our 200-day moving average, then we will continue on lower. However, at this point in time, we are bouncing. Again, keeping in mind that our MACD has our EMA line, again, our 12 and our 26 still crossing lower here. If our EMA lines do continue below the median of our MACD, then we will continue on with the pullback here. So again, keeping that in mind, cautious to the upside, looking for that possible bounce and possible bullish candle structure on our weekly chart. Looking at our swing perspective here now, we do have our 20 weekly moving average, looking to see if we will cross above our 50 weekly moving average. If this does happen, we will possibly be looking for that bullish candle setup here, looking for that possible engulfing candle to the upside here for that possible continuation. That is our bullish case scenario. This is why a lot of investors are watching out for that possible continuation still. Again, even though we did drop down below our trend line on our weekly chart, we are still very much just testing, and we very much can still continue on higher here. So again, in my opinion, very cautious to the downside as we could bounce back for that possible continuation on higher. However, to the upside, I definitely still would be careful, making sure that we get that bullish candle structure on the daily chart for that possible swing momentum to the upside. Now looking at our monthly chart again, looking at our long-term momentum, as you guys can see again, we very much are getting that rejection and wick to the upside. We have not closed this candle quite yet. We have another week till we do close this candle, but one thing that we do have to consider is that we very much are rejecting our 20-month moving average here, and that we do need to make sure we can close above it before we do possibly think we're going to continue on higher. So again, we are not late to any rally. We are not early to any major sell-off. In my opinion, we are very much looking to see how this candle closes as we are testing a very key resistance at our 20-month moving average that we need to find as support if we're going to continue on higher. And until we do get support, we are very much just testing and assuming that we could possibly just reject for a possible continuation on lower like we had here. So again, we are making sure that we are cautious to the upside still long term. Again, with our EMA lines that we have been tracking, with our 12 and our 26 on our MACD still below here. We have not crossed higher. Until we do cross higher, we are assuming that our momentum to the long side is cautious to the upside. So again, until this does happen, until we do cross higher here, we are not confirmed for any more long-term momentum at this point in time. We are cautious. Again, intraday, we are very much looking to see if we can bounce. In my opinion, swings, we are going to see if we can bounce off of our 200-day moving average here. If we do not, if we get our 200-day moving average here to curl back over, possibly cross down back below our 50-day moving average here, then we will be looking for that simple play in, again, those bearish candle setups, and we will definitely be playing to the downside. Very profitable plays that we will have if that does happen. But again, at this point in time, we are cautious to the downside still, looking to see if we will get that proof of concept to the downside, or if we will bounce back with that long-term and swing-term momentum on our MACDs with our weekly and our monthly chart that shows us that we still could possibly continue. We'll see exactly what happens. Now, again, with that said, if you are a day trader, if you are market prepping before the market opens, looking for very volatile breakouts, again, we've had a nice breakout every single day in the Instables room this week. Continuing to stay consistent is our number one focus. go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today again. And again, all of you Instables continuing to take with the market, just enjoy the rest of your weekend. Looking forward to going at it on Monday, no matter what momentum we do get in the market. Always looking for, again, either pre-market news or those major volatile breakouts with volume is what we'll continue to stay focused on. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.